This is not a recession warning. This is not a forecast about inflation or interest rates. This is a controlled demolition, and the blueprint has just been made public. What if I told you that the financial system supporting your entire way of life, the dollars in your bank, your mortgage, your retirement account, is being systematically dismantled by a global consortium that includes both America's oldest allies and its greatest rivals? And what if I told you the people we trust to protect that system, like the Fed Chairman Jerome Powell and the ECB President Christine Lagarde, are not fighting this transition? They are actively planning for its success. This is not a conspiracy theory. This is the central, documented, and accelerating policy of the global financial elite. We are living through the end of the dollar-centric world, and most people are about to be completely blindsided. Chapter 1. The Secret Architecture of a Post-Dollar World. Every single month, representatives from 60 of the world's most powerful central banks gather in a building in Basel, Switzerland, at the Bank for International Settlements, or BIS. No cameras are allowed. No journalists are invited. We are told these are boring discussions about monetary policy. That is a lie. According to the BIS's own meeting schedules, these are crisis preparation sessions. They are stress testing scenarios that, just 5 years ago, would have been considered impossible. The primary nightmare scenario keeping them awake? A world where the US dollar loses its grip as the global reserve currency within the next decade. Here's the part that should shock you. Documents from these central banking conferences, confirmed by recent Federal Reserve meeting minutes, show that the private conversations have shifted. The debate is no longer if this transition will happen. The entire focus is on how soon and coordinating the implementation timelines to prevent global chaos. Our own government knows this is coming, but they are not exactly broadcasting it on the evening news. Why? Because revealing it too early could trigger the very financial panic they are trying to prevent. But why is this happening now? It's not just geopolitics. It's simple math. The world can no longer afford America's debt. The US government is issuing trillions in new debt just to pay the interest on the old debt. Our traditional buyers, China, Japan, the EU, are not just slowing their purchases, they are actively selling. The World Gold Council's 2025 survey is the proof. 73% of global central banks plan to actively reduce their dollar holdings over the next 5 years. They are not selling because they hate America. They are selling because they are fleeing a sovereign credit risk. They must find an alternative, and to do that, they have been building a parallel system in secret. The BIS itself, through its Innovation Hub projects, is not writing academic papers. It is distributing practical blueprints for transitioning global trade away from the currency system that determines whether we can afford gas, groceries, or a vacation abroad. Chapter 2. The Digital Currency Arms Race. America is losing. While we were all arguing about Bitcoin, central banks were quietly building something far more powerful, designed to make our dollars completely optional. This is the new financial high ground, and America is nowhere to be found. In China right now, millions of people are buying their morning coffee, paying subway fares, and receiving government salaries using money that exists purely as code. This is the digital yuan, or e-CNY. According to the People's Bank of China Deputy Governor Luo, this system has already processed over 7 trillion yuan worth of transactions. That's nearly $1 trillion flowing through a system that completely bypasses every bank we have ever used. In just 12 months, transactions nearly quadrupled. Workers across 17 provinces now receive paychecks in this new currency. An entire parallel monetary system has emerged while we were still figuring out whether to trust Venmo with $20. This isn't just China. The European Central Bank, the ECB, has accelerated its digital euro timeline far beyond its public announcements. Technical teams in Frankfurt are, as we speak, stress testing systems designed to handle the entire European economy running on programmable money. But the real weapon, the thing that connects all of this, is a project called mBridge. Run by the same BIS that hosts those secret meetings, Project mBridge just completed its minimum viable product stage. It is a platform that allows central banks, China, the UAE, Hong Kong, Thailand, to settle large-scale cross-border trades in real time using their own CBDCs, with zero exposure to the US dollar. This isn't a test anymore. It's operational. Saudi Arabia, a core US ally, has joined as a full participant. This is the technical execution of the de-dollarization plan. Think about what this means. Our current system, built on messaging protocols from the 1970s, takes days and charges high fees. These new systems, using AI and quantum cryptography, settle in seconds. And they are programmable. A government can write rules into the money itself. Rules that could, for example, block transactions with a sanctioned country or currency. While Russia and Iran complete major energy deals using crypto systems to evade sanctions, the legitimate world is building a far more sophisticated tool to do the same thing, on a global scale. Chapter 3. The BRICS Economic War Room. Deconstructing the de-dollarization playbook. If CBDCs are the weapon, the BRICS alliance is the army. This is the economic alliance that now represents 45% of the global population and, more importantly, controls over 28% of the world's GDP. And their stated public goal is to end dollar dominance. They just announced their own BRICS Bridge payment platform, a system designed to connect member countries without ever touching the SWIFT, a network that processes our international payments. Brazil's payment system now links directly to India's. China's digital currency is being integrated with Russia's financial infrastructure. 23 countries are now actively processing international payments through systems where the dollar is optional, not required. And here is the linchpin: Saudi Arabia. The nation that created the petrodollar system in the 1970s by agreeing to sell oil exclusively in dollars is now actively participating in these non-dollar payment systems and has joined Project mBridge. When the one nation that guaranteed the dollar's global dominance starts building the exits, what does that tell you? This alliance is coordinating on all fronts. They are conducting joint exercises that simulate coordinated responses to US financial sanctions and currency attacks. They are not just building alternatives, they are preparing to defend their new system against economic warfare. They have built parallel institutions. The New Development Bank, according to its own reports, has approved $200 billion in non-dollar project financing. The Asian Infrastructure Investment Bank processes settlements independently of our financial networks. And most critically, they are synchronizing their gold purchases. According to the World Gold Council, central banks bought over 1,000 tons of gold for the third consecutive year in 2024, and the data from 2025 shows this is accelerating. This isn't random. They are converting their dying dollar reserves into a neutral asset that cannot be printed or sanctioned, and they are doing it together to maximize market impact. Chapter 4. The Corporate Exodus. How global business is ditching the dollar. This is no longer just a government-level plan. The private sector is now in full-blown retreat from the dollar. Imagine walking into your job tomorrow and discovering your company just restructured its entire international business to avoid using US currency. It's already happening. Let me give you a concrete example. Major German automakers are right now restructuring billion-dollar procurement deals with their Chinese partners to settle entirely in euros and yuan. These aren't small experimental contracts. Entire production lines for the electric vehicle you might buy next year now operate through currency arrangements that never involve a single dollar. Why? 5 years ago, executives told me it was about saving money on conversion fees. Today, the mindset has completely changed. It's about de-risking. After seeing the US government seize Russia's dollar reserves, every CFO in the world is terrified of being caught on the wrong side of geopolitics. They are building resilience. The shift is most dramatic in energy, and this directly affects the price you pay at the pump. According to energy trade reports, Russia's energy exports to China and India now exceed $100 billion annually, all of it settled in non-dollar currencies. The oil that heats our homes flows through systems that treat the dollar as irrelevant. This extends to our own savings. Central banks like Poland's have fundamentally altered their reserve strategies, increasing gold from 13% to over 20% of reserves in just 2 years. Turkey, Kazakhstan, and the Czech Republic are following the same playbook. These are not gradual adjustments. They are rapid structural shifts away from the dollar-denominated assets that form the bedrock of your 401k. The African Development Bank approved $50 billion in infrastructure financing specifically structured to avoid dollar requirements. Corporate treasuries at multinational firms now maintain parallel cash management systems optimized for local currency operations, ready to continue operating even if the dollar-based systems become unavailable. Here is the fundamental shift. 5 years ago, a non-dollar transaction required special justification. Today, a dollar transaction increasingly requires justification for why a cheaper, faster alternative wasn't used instead. Chapter 5. The concrete and cable. Network you can't see. While we have been focused on social media debates, construction crews across 3 continents have been building the physical backbone of this new financial system. This is what makes the transition irreversible. Deep beneath the Indian Ocean, new fiber optic cables are being laid along routes that connect Asia, Africa, and the Middle East without passing through traditional Western communication hubs. These aren't just internet cables. They are financial arteries designed to carry currency transactions and trade settlements through networks that completely bypass American oversight. In Singapore, Asia's largest clearing and settlement facility is rising from reclaimed land. When completed, it will process trillions of dollars in international transactions without ever routing through New York or London. In Hong Kong, new data centers house the technical infrastructure for these cross-border payment systems, maintaining real-time connections to central banks across the world. The Asian Infrastructure Investment Bank just opened its new settlement facility, with 57 countries celebrating systems that clear project financing without involving Western institutions. Strategic petroleum reserves in the United Arab Emirates are being built with the capacity to price and settle oil transactions in yuan, euros, or local currencies. Port facilities across Southeast Asia are installing cargo tracking systems that integrate directly with these regional currency networks. Even the insurance markets have shifted. Lloyd's of London now offers policies that protect Asian companies against dollar volatility, a complete reversal that signals how global finance is shifting away from a dollar-centric model. Conservative estimates suggest over $200 billion has been committed to these financial infrastructure projects. This isn't speculative. It's practical spending on systems that are already operational. The foundation for a post-dollar world isn't being planned. It is built. Final warning. The inevitable transition and your personal timeline. Have you noticed that financial headlines have stopped asking if the dollar will lose its dominance and started asking when and how quickly? We have crossed the point of inevitability. Listen to the language from central bank governors. They've stopped speaking in hypotheticals. When Poland's central bank announces its intention to reach 20% gold reserves by a specific date, or when China discusses digital yuan interoperability targets with precision, these are not aspirational goals. These are implementation timelines. Here is the most critical timeline for you to watch. According to the Atlantic Council's CBDC tracker, by 2026, central bank digital currencies will achieve interoperability across more than 40 countries. This isn't a prediction. It represents technical specifications that have already been tested and validated. Training programs for monetary officials have shifted. They are now learning how to manage multi-currency transition scenarios. Crisis simulations have evolved. They no longer ask, how do we survive if the dollar fails? They now ask, how do we optimize the transition between available alternatives? And perhaps most revealing is the Great Silence. Gone are the diplomatic reassurances about preserving the dollar system. Instead, officials describe post-dollar arrangements with the same matter-of-fact tone they once reserved for interest rate adjustments. Imagine waking up in 2030 to discover that international commerce operates so efficiently without dollars that using them seems as outdated as sending a fax. A coffee exporter in Brazil receives payment in digital reais from a German buyer, then immediately uses those funds to purchase equipment from India, all settled in under 3 minutes without any dollar conversion. This doesn't mean the dollar disappears tomorrow, but it means it loses the privilege that has subsidized the American economic lifestyle for decades. It means our ability to fund our deficits by selling paper to the world is over. And that means the purchasing power in your wallet will face a reckoning. This new financial architecture hasn't eliminated the dollar, but it has ended its monopoly. The question isn't whether this transformation will affect our economic future, it's whether we'll recognize it in time to adapt. Understanding these shifts isn't about fear, it's about awareness. The more we understand what's happening, the better we can navigate the financial world that is emerging around us.